Hi, Saen Higgins here, and today we're going to talk about the beautiful Northwest Washington. Is it a lien or a deed state? Today we're going to delve into Washington and its unique approach to this lien, or wait, is it a deed? We're going to cover that in this video. In this video, we're going to reveal some very unique strategies within Washington that if you're not careful, can break you, but if you know what you're doing, which we're going to cover in this video, can make you and your family a ton of money. At the end of this video, I'm going to show you a very little known secret in Washington that'll show you how to capitalize this and hit those 7 figures, so stick around for that. Okay, let's just look at this as a whole. Washington, what a beautiful place. Now, as a whole, at about 25,000 feet, it's so profitable, but Washington is unique in the fact that it's kind of 2 different states. You got the west coast of Washington and everything else in there. And how the counties behave is going to determine how you make money. And my students have made a ton of money in Washington. So some of the things you need to look at, let's just talk about this. You could have stumbled on this because you heard about tax liens, tax deeds. Why are there tax liens and tax deeds out there? Is this just the greedy government trying to get money? No, it's actually super important society-wise to keep our whole system going. I've traveled around the world multiple times, and it's really easy when I go to a country and I know how their tax system is just by looking at the infrastructure around. The reason the United States has such a tight infrastructure is because of property taxes, period. End of story. Okay, so if you look at the history of money and you look at colonialism back in the days, you've got either England or France or Spain. You better hope you were an English colony because they put their tax system over here. Okay, so in other words, the English, this tiny little itty bitty island dominated for over 300 years with less than people by a quarter than France and everybody else has because they had an incredible tax system that everybody respected. If you go back to the French Revolution, that was all about literally taxation without any representation. The glutton of the upper class kept taxing more and more. They said, hey, we're not going to do this anymore. Whereas England, pretty much, even though they had a couple of their own internal civil wars, they did this very well. What does it have to do with the United States? We learned so much over the hundreds of years of them trying to figure it out. When the United States was formed, obviously an English colony originally, we took that system over with us. And what happened is tax liens were created literally over 300 years ago, 100 years before we even became a country. So what they say is this: if you own a piece of property, you have to pay a small percentage of the value of that property to the local municipality, the county, in order to put infrastructure in. Roads, bridges, fire department, and number 1 is escuela. That is Spanish for school. Okay, so you need school systems. So probably 55 to 65% of all property taxes go towards the school system. Without that, it would crumble. But then you've got everything else. You've got the roads, you've got the bridges, you've got the infrastructure, the parks and everything else. Well, let's go back to what I was talking about before. If you've done any traveling around there, around the world, and you go to ex-Spanish colonies or French colonies, their infrastructure isn't even the same. There are parts of South and Central America that don't even use addresses. I don't know how they get to Amazon packages because it didn't really matter because that's not how they base their tax structure. But you also don't have stop signs. You have potholes and an education system that's kind of all in the air. So there's the gratitude of our tax system here in the United States. But not only that it's also provided a very unique opportunity for people like you and I. Okay, in other words, if the county doesn't get this money, they say, hey, we need this money to keep this infrastructure going. Now, there is $400 billion in uncollected property taxes in the United States every single year. And that sounds like a lot, and it kind of is. But understand that most counties collect 99.5% of all property taxes owed because of tax liens. So if you were a bank and you lent money and 99.5% of your people paid back, you'd be on the cover of Bankers R Us. That's a phenomenal return rate. In other words, everybody's paying their money back. But in the counties, they sit there and go, well, then why are they so worried about this? Because by law, us, the taxpayers, demand that everybody, hey, if I'm going to pay mine, they're going to pay theirs, everybody's going to pay theirs. So that 0.5% is where you and I dwell in. So that could be 20,000 liens. That could be all, I mean, in Chicago alone, they had 55,000 liens come up this year, okay? So let's go back to Washington. Washington is a deed state. What does that mean? In the state of Washington, you can literally be delinquent 4 years before the county will take action. Now, that doesn't mean you don't owe the money. See, what the states do is they say, hey, are we going to be a lien or a deed? In a lien, they can sell the lien on the property for after 1 year of being delinquent. But the property cannot be foreclosed on in any state in the United States until it's been delinquent a minimum of 4 years. So when it becomes a deed state, they say, you know what, we're not going to sell it during that 4 years. Okay, I don't know why they wouldn't, because they need the capital. But the property owner, if they come in, is still going to have to pay the interest rate, which usually is 16 to 18%. In the state of Washington, they say 4 years. At the end of 4 years, enough's enough. You and I come in there, we put up the amount of money for the back taxes. Now, understand it's going to be a premium bidding. So again, let's use an example of a $250,000 property, and let's say that there's $15,000 in delinquent taxes. Once I get my research done, which I'll get to in a minute, I determine how much I'm willing to pay. Let's say I win the bid at $60,000. I give that $60,000 to the county. They give me the tax deed to the property. Okay? Now understand, the county has already done 90% of the work for me. They've notified everybody that had a financial interest in that property. That could be Bank of America, that could be, Wells Fargo, Citibank, whatever the case is. They say, hey, we're foreclosing on this property, and because we're the county, we will eliminate your position if you do not come in within the prescribed amount of time, which is usually 60 to 90 days, somewhere in that area. Nobody comes in, it goes to the sale, I buy the lien or the deed on that property, I own it free and clear of all liens and encumbrances, and I'm buying it for a fraction of the fair market value of the property. So my profit potential is ginormous in this situation. Now, in the very beginning, I mentioned there's two different kinds of, two different parts of Washington. So there's the West Coast side of that, and you've got, the Seattle area, and you kind of got everything else over there. And so all of these different counties, and the thing is, Washington's a beautiful state. It's a fun place to live. They've got all sorts of outdoor activities, camping, hiking, all sorts of different technologies. Obviously, Microsoft, Amazon started up there, the whole 9 yards. On the other side of it is, man, they have a lucrative tax deed department. So when you go in there and you're picking your counties, you say, hey, okay, I want to go over here. Spokane, maybe those areas, some of the surrounding counties in that area, you start getting your information. You're finding out the value of those properties, and there's no ifs, ands, or buts about it. When you find a property and you say, this is what it's worth and this is what I'm willing to pay, guess what? You get the deed to the property, you own it free and clear right at that moment. The only thing you have to do is get it fixed up and sell that property, if even that. I have seen my students make truckloads of money in the state of Washington. So this might be one of those places that you want to get rolling with. And here's the crazy thing about Washington. Some of the counties will say, hey, if you don't have all the money for your bid, give us a deposit and bring the balance in 90 days, 120 days, whatever the case is. So one of the things you want to ask in all the counties in the United States, when does all the money need to be paid? So some places out there go, like for instance, in California, they say 5% down or $7,000, whatever is greater, and we want the balance in 120 days. Well, sounds like a finance program to me, kind of. In Minnesota, Hennepin County, 10% down, you make one payment of 10% a month for 10% a year for 10 years, and you own the property. Now you have to qualify. Okay, you have to be 18 years or older and able to sign your name. Okay, you're in. Okay, you don't even have to be a U.S. citizen. So all the people coming south of the border, they're even qualified. Oh, did I just say that? Oh, darn. So listen, this is an opportunity for everybody out there, okay? Washington is just one of those places where you get the property right away. So if you want to make money right now, this might be where you want to look at. It doesn't matter where you get started, you just have to get started. Another nice, unique thing about Washington, it is a great place to get started with your private retirement account. Imagine this. You've worked at a company for 15 or 20 years. You've got a nice little nest egg in their 401k. You don't work there anymore. and you decide you want to set yourself up a private retirement account, and I've got other videos on that. So now you've got this capital, and you go in there and you buy a property and you own it free and clear in your retirement account for a fraction of the fair market value. In these transactions, it's a possibility of doubling the value of your retirement account immediately. And there are other videos I have out there that show you how to turbocharge even that once you get it going. It's insane what you can do. I mean, we're at the greatest time in man's history to make money in the greatest country to make that happen, right here in the United States. Look, there's a lot of information out there, okay? And I've got a brand new course that'll show you how to rock Washington and all the other states out there. All you've got to do is click the link or go to Higgins, Higgins method.com, boom, and we'll take care of you. Free course, my gift to you. Thank you very much. God bless and good luck.